Hi, I'm Ashley with Realtors Who Drink podcast. We're back here today. Nikki usually does that.
I can do it.
Yeah, you do it.
Okay. Hey y'all, we are back with another episode of Realtors Who Drink. Today we're with Toni Freeman with Assurance. I like to call her Lady T though. Thanks for being on, Toni.
Thank y'all for having me. I was very excited to be invited.
We usually make people pretty nervous when we say that we're going to bring them on, but honestly, it's about your expertise, which you're going to be so good at anyway.
Thank you.
But the first thing I want to ask is, since the rates have come down a little bit, tell me what you're seeing as far as applications.
So we are seeing quite a few more people apply. I think they're, ready to take the plunge now that the rates have dropped a little. But what we're seeing more of is we're seeing a lot more applications in the higher price points, $300 and above, and really a lot in that $600,000 to $800,000 range. I think with that drop at that price point, it does make a pretty huge difference in the monthly payment. And we've seen an uptick of that purchase price range.
Do you think that are y'all still offering buy downs for anybody that is still worried about the rate?
We haven't had a whole lot of people ask about buy downs recently because, depending on loan type, the government rates, we can still go up to about, I think it's 4.25 if I remember correctly. Don't quote me on that. I'm not the best at remembering the specific max loan limits, but we're able to get a government rate in the fives with, a 1% discount fee or so. The conventional rates, we are still not really seeing people do the buy downs. They're more so just paying like maybe a discount point to 1.5 to get a rate at that low 6 number and possibly even down to 5.99.
Which is great. I mean, we say it all the time. We can keep hammering it in, but that's an actual great rate. I mean, it is. So Nikki and I were talking the other day about, her question to me was, what are you seeing on any showings under 300? And it just falls in par with what you're talking about, which is the ones that are over 300 are seeing where that might make a difference, and they are moving forward. But the first-time home buyers are still a little scared. Do you think that?
They are, because the sales price of the homes has a lot to do with it, because used to you could do a first-time home buyer, that price point in the past was about $150,000 to $200,000. Now that price point for a first-time home buyer is about $250,000 to $300,000. Mm-hmm. We're still talking about your young first-time home buyers who are not, too far along in their career, are not making the larger amounts of money as the regular clients, and it's still quite a payment shock for them when they see what that monthly payment is going to be on that $250,000 to $300,000 price point home.
Well, and I do think that probably salaries haven't caught up with where people are getting, where house prices are here yet.
And I 100% agree with you on that.
And hopefully that'll change, because I don't see the prices going down. Mm-hmm. In fact, I think if the interest rates do come down at all, I see some of these prices going up.
I think so too. And I've seen one of your recent podcasts where we were talking about it is kind of a seller's market now.
Right.
We say that, but we are still seeing sellers paying closing costs for our clients because of the fact that the clients really need their own funds for down payment to try and get that monthly payment lower.
Right.
So that's what we try when we're discussing pre-approvals with our clients, is trying to, be careful what you offer, of course,
right,
but also try to negotiate as much closing costs as you can get to, so that you can use your funds to either buy down the regular rate
or just keep some cash in your account.
Exactly.
And Kim has
I will say this: closing costs has gone up a lot.
Yeah.
And most of that it's not really the regular closing costs. It's not your lender fees, your appraisal fee, or your title company charges. Mm-hmm. It's the cost of the homeowner's insurance and the flood insurance.
That's what
we're really having to shop those. Like, we have our clients shop it, and then we also have our own, every loan officer has a group of insurance agents that they like to try and, refer some business to. We shop it as much as we can for our clients, and we're also doing a lot more private flood policies versus the NFIP flood policies, because a lot of times even though it might not be in a flood zone and clients want to get flood insurance, are the ones that are in flood zones, the private flood is a much better option, and you can get the same type coverages for a lot less expensive premium.
But there are loans that you can't do that with.
No.
correct?
All of the loan
All
types
of the loan
allow
types.
private flood now.
That's amazing.
In the past, it was FHA was the only loan program that did not allow private
Okay.
flood, but they've lifted that stipulation because of the expense of the premiums now.
Right. And homeowners insurance and flood insurance. And that's what I was going to say is Kim and I both, and Nikki too, we all have new construction that we have that is mainly sitting there right now. It started to pick up some, but I know that our sellers, our builders are way more eager to maybe spend a little bit more money on closing costs or spend a little bit more money on compensation. Just something to get people in the door.
Right. I mean, mine's offering $15,000 right now, or buy downs, or whatever you want to
Right.
do.
Yeah, use it for. Like,
Right.
use it your way.
Which
Yeah.
I mean, in another situation, a half a point more, and they won't have to offer that anymore. Don't you
Yeah.
agree?
I agree. And then, I'm trying to remember exactly what my point for this, what I was about to say, and I kind of lost track. You're saying that the builder's offering that. We've had clients where, in the past, a 720 or higher client was typically a client that we would say, your best option is probably to go conventional.
Right.
But there's so many pricing adjusters now related to the cost of private mortgage insurance, the cost of the interest rates based on those credit scores. In the past, FHA was like if you were 620 to about 680, and then kind of above that, you were kind of toward that conventional range.
Right.
We are seeing a lot more clients go FHA because you can get a lower rate.
Okay.
The MI, based on where their credit score may fall, may be very similar to the MI coverage for a conventional loan, and it'll yield them a lower payment. So we always try and look at both options to see which one benefits them the best and kind of compare their equity position in 3 to 5 years based on where their principal balance will be at that lower interest rate on the FHA loan with that slightly higher PMI.
Well, it has to
Compared
be better.
to conventional. And sometimes it is. It's not always. We got to
Okay.
look at it. And that's why there's not a one loan that fits all.
Right. Right.
Just because someone says, hey, you should do FHA, well, explain to me why I should do FHA.
Right.
And that's what I try and do.
Well, that's what we all love about you is that you do make sure that they understand what they're getting into when they. You cannot imagine how many times we end up at a closing table, and somebody doesn't understand what's on the paper.
Right.
They don't understand where this number came from. They don't understand why this fee is in there. They don't understand these things, and you've always been very good about making sure that people
Understand.
understood that.
Well, I look at it as would I want anyone in my family or my kids dealing and showing up at a closing table and not understanding what's going on? And that the answer to that is always no. I'm sure just like
If only everybody lived by that, right?
You want your clients to be your clients for life.
Right.
And I do
Right.
too. And it's like I've got clients that I've worked with 4 and 5 times, and now they're referring their children to me.
Right.
That's what the end goal for all of this is. It's not about just like, hey, let's just get you into something and we'll figure it out later. Absolutely not.
Right.
Correct.
Nikki, when we were talking about that the other day, we don't have that many things that are under 300,000. So that's good.
That's good. But still, the things that are, they're more sitting now.
And you have some investment properties that you've been able to get rid of pretty quickly too, don't you? Haven't you?
Yes. So I've been very blessed with that price range. So
Yeah. Well, look, I don't think that anything's changing. I know that people talk about the economy, but I think probably, in my eyes at least, and y'all may agree or disagree, the economy is probably as good as I've seen it in a while. And I feel like there's a very stable workforce right now. So I feel like if you have the opportunity to reach out and find out what you could qualify for, I think I posted this on my Facebook yesterday, but quit paying somebody else's mortgage
yeah.
and start
And like
paying
we
your
always
own.
say, if you wait for the rates to drop, you're going to be competing with lots more buyers. So
And
don't
that doesn't
do
just
that.
mean regular buyers.
I
That
mean,
means
the
investors who have cash.
Yeah.
The other day, I had somebody $25,000 less price and fixed everything on the inspection. I mean, you can't get better than that.
Right.
To be honest with you.
That's right. So are y'all struggling at all with any of the I know FHA appraisers in the past have been a little tough on things that are wrong with the house.
Not usually. I mean, it usually has to be pretty in your face.
Right.
I mean, like where there's just rotting pieces of chunk wood missing from the bottom of columns, or, you know, the fascia board, you can see slight holes. Now, we will get, you know, there's a few that are a little more picky than others. You know, we all have our favorites on our internal list of our approved
I better know
appraisers.
who's on the top.
But, you know, for the most part, it's usually a quick fix. You
Yeah.
know, if there's missing shingles, you know, that's going to get notated. You know, but interior, we're not really seeing a whole lot of interior items that need to be repaired. It's mostly like the peeling, chipping paint, the rotting wood,
Right.
really cracked windows, not even so much like the foggy windows
Right.
anymore. You know,
Right.
that used to be a big deal in the past, and we're not even really seeing that anymore.
Thank goodness, because it's cosmetic.
It is cosmetic. Now, a cracked one is not. And
Yeah.
so I think that at least the three of us, when I go to a listing, the first thing I do is walk around outside and see and go, look, you know, it depends on who buys this, but there's a very good chance you're going to have to replace this fascia board. So you might as well go ahead and do it.
Do
Yeah.
it now and get
Yeah.
it over with.
Now, normally, like on VA, we'll see them, and it's again, it's still certain appraisers. It's not all of them, but we had one that it was an exterior shed, not living area, but it really was in pretty deplorable condition, and they
Was
deemed
it attached to the house?
No, it was not, but they deemed it a safety hazard, and it either had to be torn down or repaired. Now, granted, I looked at the pics. I wouldn't have wanted it on my property,
Right.
but it was still storage.
That's
like in
something
my
you can put a match to.
in
though.
my mind, I was like, why is this really a big deal?
Yeah.
But it was either to tear it down or repair it before we could close on it.
Which
So,
did they
dude,
do?
that's what I was
Did they
about to
tear it
ask.
down or repair it? Do you
I
remember?
think they ended up doing some repairs to it. Basically, it wasn't much to
Right.
technically repair it, but the interior was not in great shape either, but the person still wanted it as storage, so they did repair it.
Right,
Gotcha.
right. Well, look, if you guys are interested in just taking a look at what those numbers look like, since the rates have come down, we have Tony's number. Just give us a call.
I'd
But-
love to help you guys.
Thank y'all.
Cheers.
Cheers.